Hey everybody, Brian from Bear Traders here. It is the weekend, Saturday, August the 6th. Hope everybody's having a good weekend. And of course, this is the weekend video. We'll take a look at what happened last week in the markets, and then we'll look ahead and see what's coming down the pipe for this week. It's going to be another interesting week, so let's get at it. So starting out by looking at what happened last week. We finished off the week Friday with a very strong jobs number. Came out about twice as higher than everybody had expected, and there was also some pretty strong wage growth as well that got reported during the week. So overall, the markets took it in stride actually, but again, sort of more evidence that this economy is still pretty strong, and the Qs and IWM to more risk-on oriented indexes fared the best on the week. You can see they were up almost 2%. SPY managed to get about a third of a percent gain there, and the Dow was off just a little bit. But overall, not a bad week. Areas of strength and weakness, you can see here, energy was strong last week. Now it was one of the weakest sectors. Real estate, materials, biggest losers on the week. And we had on a lot of the risk-on sectors that were the strongest gainers, so technology, communications, services, and the discretionary stocks moved up nicely. On the Treasury note, of course, with the strong economic indicators, jobs and wages, we've moved our Treasury note moved up higher. 10-year and the 2-year also popped up, but you can see here we still have an inversion of the yield curve. Correspondingly, the US dollar gained, of course, with the rising interest rates, and Bitcoin did kind of push up to 24,500 and seems to have topped out for now, and we're just, last check we were trading around 22,300, so a little bit of consolidation action there. And before we start going over some charts, as always, like to do a quick ad for my book on Amazon, Profiting as an Active Trader. Rules, Strategies, Routines, and an Active Stock and Option Trader. So if you're interested in that, there it is. So let's take a look at some charts here. And we'll start with the treasuries, because that's what I always like to start with, because it's the treasuries that are the bigger market than the stock market. And keeping an eye on the 2-year and the 10-year, you can see here the 2-year, we did get a bounce back up here on the week. And of course, those strong job and wage numbers pushed that interest rate back up, with anticipating the Fed having to be more aggressive with their interest rates, both on the short and the long end. So, and you can see here on the long end, the 10-year moved up as well on the week. So both yields moved up, the 2 and the 10. So you can see here on the daily, the transports, we had a nice comeback, and we started out down on the day on Friday. You can see how we made a nice little comeback there on Friday after the jobs number was released. And you can see here we kind of ended up sort of up a bit on the week on the transports, but we overall we are on a weekly, we are kind of stalling out here. You can see here we've kind of come up to an area where there's probably some prior support, which will now become resistance in this area. So MACD is moving up. RSI is kind of flattening out around 50, which means we haven't got really momentum one way or the other. The Dow, again, you can kind of see our RSI is flattening out. You can see here we are trading and have been trading for about 5 or 6 days in a pretty narrow range here, you can see. And so now what's going to happen is we're going to get some basically back and forth until one either the buyers or sellers take control of this, but there could be a bit of a pause here for the next 2 days until we get that CPI number on Wednesday, which will be coming out. And again, you can see here on the weekly, a bit of an indecision candle on the weekly, and momentum sort of waning a bit there one way or another. The Qs, again, we kind of have a bit of a range established here, a bit more strength in the Qs. As we saw from about a 2% rise on the weekly. You can see here we've broken out through this area that was diagonal trend line for resistance. We have broken out there, but again, the momentum seems to be moving to the upside still with the Qs. But again, I think CPI will kind of dictate where that's going to go maybe as well. But moving along to the SPY, again, you can see here we're kind of trading range bound now. So it's going to be interesting to see which side buyers or sellers take control. Again, we were up on the week, about 1/3%. Not a bad gain, but you know, taking a bit of a breather after this big move. I think it was about a 4% move we had last week. So, and we are up into an area here which would be probably prior, which is all prior support here, prior support along here, became resistance here, and now we're back up to that level again. So again, we're just seem to be stalling out there. The IWM really had a really nice comeback on Friday. We started down lower with those jobs numbers, but we just huge engulfing candle. This is an engulfing candle again, fairly strong. Again, a response, I think, to the thought that a strong economy, usually small caps do well in a small economy, so or a buoyant economy. So there you go, and we are breaking out again from this downward sloping trend line on the IWM as well. So nice move up there on the IWM, probably getting a continuation next week. And the VIX, you know, again, just no fear in the market. Just keep seeing that over and over. The dollar, again, we're just, again, we seem to be trading in a bit of a range here. Not moving one way or another. Volume pretty light. Momentum is starting to pick up to the upside again. So we'll be keeping an eye on this range here to see if we just are stuck there, if we're going to break out one way or another. Bitcoin, again, Bitcoin just sort of, you know, we managed to top out around this 24,500 level, and now we're just hanging around under 23,000, just working it sideways. And yeah, you can see it there right now, just churning sideways around the 200-day moving average. So let's take a look at some stocks I got on watch and some I'm holding here. Again, Apple's had a really nice run up after we got this this bottom back at the beginning of July. Had a nice run through July. We are really overbought here, and looks like we're kind of, again, sort of same theme. We might be stuck in a bit of this range here between 160, 165, waiting for this CPI number to come out. So possible this 170 level looks like an area that probably has some element of resistance. So maybe could sell some calls there and buy some 180s above it just to cover if you wanted to do a spread. Here's a firm. A firm is actually breaking out here. So here's a couple prior levels of resistance. On Wednesday we broke out. Friday we had that big pullback in the market, but then we had this big engulfing candle, and it looks like a firm wants to go higher. So again, this stock will do well when the economy does well and everybody has jobs and can make their payments. So a firm looking like it might want to continue to go higher here. I'll be watching that if the economy does start to slow down, and they'll be the ones that'll get hit. Baba, just looking at Baba here, Baba really is struggling. You have this issue with the Chinese government that just seem to don't seem to like capitalism, and also they keep going into lockdown, which I think is also creating some heartburn for these holders. But this 89 sort of 90 level looks like an area that could hold on Baba. Possibly, so again, a good level to trade against there on Baba. CALM is a egg producer, and they're kind of consolidating here. You can see here we're just moving into a range, so we're going to set an alert here just around maybe 52, and if we start to break above that, could easily move higher. Charge point, again, looking on the verge of breaking out here. 16. We've got 1660 there as a 200-day moving average, but again, the Build Back Better bill has a lot of stuff for clean energy, and ChargePoint is they build chargers for electric cars. So of course, that's could be a big boon for them. We've got Disney reporting this week. I'll go through some of the stocks that are reporting this week, but you can see here this 100 level seems pretty important. I think Disney's going to come out with some decent numbers. We've had some bottoming action down here around 95, so I'm going to look at possible earnings trade with using options later in the week. Maybe selling some puts. Could always around 100 there, and could cover them with buying 95 puts. But we'll see what the pricing looks like as we get closer to earnings. Ford, I'm still long. I bought some options. They expire in January 2023. They're already well in the money because I bought them when Ford was trading around 14. They're 14 calls, so they're looking pretty stellar. I have sold some of them already just to take some profits. Gold, I'm watching gold here. I'm watching GDX, GDXJ. They're both on the verge of, they look like they're putting in a bottom. This kind of looks like a bit of an inverse head and shoulders. So if we can break sort of this 2650 level on gold, could be interesting for a move higher on the GDX. This is a monthly chart of Intel. If you're really looking for something, looking at something maybe long-term for Intel, like buying some long-dated options like I've done with Ford, it does look like it's trying to put in a bit of a bottom here. The month is still young, but this is a monthly chart, so it would even be better if it got down to around this 33 level, 3250. But you can see here we're really oversold on the stochastics. And when we get really oversold on stochastics, like if you look at back here, quite often that leads to a bit of a rally here. So we're really, really severely oversold. So I think there is a possibility that Intel could at least bounce. I'm still short some NEO at 20. I was hoping for a bit better of a drop. I did cover some when it got down around 19, and still hoping that it will continue to drop there. Uber's looking a little toppy after the really good earnings report. This 200-day moving average could be resistance for the time being. It already sort of was resistance on Friday, so possible to sell some calls there. Oil is really at a level here where it needs to hold. This is a prior low where we started out Friday right at that low, so I'm going to be watching this USO for a break of 70 for a continuation move lower on XLE. The XLE was up on Friday, but and oil did come back a little bit here, but again, a bit of a disconnect there with the good earnings reports on the oil companies and the oil going the other way. I think we'll get back to a correlation there. And that's about it, everybody. So wrapping things up here, what are we going to watch next week? Of course, these are the Dow, Q, SPY, and IWM levels that we're currently at, and we've kind of tightened up these support and resistance levels because we seem to be sort of compressing into some ranges as I went over in some of the charts earlier. So you can take a look at that. And of course, big economics events coming up this week. This much anticipated CPI numbers are going to be watched very closely to see if there's any relief from inflation. And of course, everyone will be watching that. And then we do have some initial jobless claims on Thursday, but CPI will be the big one on Wednesday, just to get that read on inflation. And earnings, we are getting sort of towards the end of the bulk of the earnings season. We do have lots of interesting earnings coming up this week. Tyson PLTR, UPST, Triple D, which is the printing place. We've got NVAX and some interesting Tuesday. We'll have a cruise line and of course Coin, Roblox, Plug, Win. I've got Plug there twice. Save, Airline, and yeah, Disney will be interesting. Like I said, I'm kind of interested in playing that as an earnings trade. And of course, Rivian will be interesting as well. It's a highly watched stock. So lots going on, and should be an interesting week. So and especially with this CPI number on Friday. So that's it. Have a good rest of the weekend, everybody. We'll see you 8 o'clock in the morning live on YouTube. We'll be doing the pre-market show starting up there, and then trading the market open at 9:30 for our members. So we'll see you all then. Bye for now.